Welcome everyone. Today I'm going to be talking about two main things. The first one is what I expect to happen in the real estate market over the next 12 to 18 months from an appreciation standpoint, and my three favorite markets going into 2021 and probably 2022. Let's get started. Welcome back, everyone. Today's another episode, kind of just a concept that I want to put out there for you all. So I'm coming to you because my background in predicting markets has been rather successful since 2015. In 2015, I used a process that I built over time using a number of variables, measuring the fundamentals of a market, the upside potential, and a number of other ways to look at a market. And what that led me to back in 2016 was the market of Huntsville, Alabama. I got a lot of my clients in Huntsville, Alabama at price points that are 20 to 30% below what they are today. And the rents have substantially grown there. It was a rock solid market, definitely a home run that we selected. So I have a mantra, the first time's luck, the second time's coincidence, and the third time's a pattern. So I wasn't quite convinced that my methodology was working. So again, I applied it for 2017, 2018, and our market of choice in that time was Cleveland from the numbers. And again, fast forward to today, Cleveland has an abundance of investors that has had substantial price growth, both in rent and asset prices over the last 2 years. So again, another home run. So we're using that same methodology going forward in 2021 and 2022. And there are three markets that I have selected to be probably the winners. Now, this methodology was done pre-COVID, and so there's a lot of influence from COVID that is going to change it even more so. But these markets all have the tailwinds that I like to see, and they have a tailwind of migration from other cities driven by COVID. And those three markets, the first one, should not be a surprise to you, is Austin, Texas. Now, not all of Austin. There are three markets within Austin that I am focusing on, and they're all in the northeast quadrants of Austin, Texas. And these are price points around the 200 to 215 mark, renting for about $1,600 a month. So they are cash flowing a little bit, $200 to $300 per month. But I think the upside there is substantial, potentially double-digit gains over the next 12 to 18 months. Okay. The second market is Phoenix, particularly in Chandler and the East Valley area. I think Phoenix has substantial room to grow. And from what I've been reading, it actually is the number one market of the migration from the COVID. And it was already a hot market pre-COVID. I expect it to be a continuous hot market. And if you've been there, Scottsdale is a wonderful area, very pretty. Phoenix is very accessible to many other cities. It's in a good location. And I'm there once a month doing my resort project over in Flagstaff. So again, I'm very bullish on the Phoenix market. And then number three is a little town outside of Nashville, Tennessee, and that is Murfreesboro, Tennessee. Now, I also think there's going to be some halo effect to the Chattanooga market. So again, there are prices that are reasonable in those markets, but I will tell you that Murfreesboro is already seeing that massive influx of investors and a massive demand shift on the curve. So again, I think these are my three markets going into 2021, 2022. And generally, I expect a 7 to 12, 13% appreciation rate in these markets year over year, okay? So it's a fine balance. Now, the second thing I want to talk about is where I think the real estate market is going over the next 12 to 18 months. And Q3 of 2019, I was at a conference and I was speaking, and they asked me about where I see the market going. And I had all these variables as to why I thought that. And truly, the only headwind that I saw in the real estate market, I saw it in the luxury market. I thought that had some risk. I saw it in the big apartment complexes in the A-class luxury grade. I think that had some risk. And I saw some risk in the major cities of New York and San Francisco for a variety of reasons, some of which you may know. And so I call those markets as skeptical, potentially not seeing the appreciation that we would expect. And we, in fact, did see those price reductions already occurring pre-COVID. Okay, and now with COVID, it's even more substantial. But where I saw the most upside was in the single-family homes sub $250,000 price range. There's a massive supply shortage there, and I was predicting a 7 to 11% appreciation on that segment. Well, we just saw a report this past week. The result of 13% appreciation in that segment. And again, so the methodology that we use more or less accurately predicted where we would be in that asset class. Now we're looking at the same segment today, and our numbers are still showing a 7 to 10% appreciation over the next 12 to 18 months in that sub $300,000 price point within real estate. So again, I'm very bullish in the majority of markets that have good fundamentals, as we always talk about, and I expect the real estate market to do quite well in that sub $300,000 single family market. So do your research, make sure you're finding your own way to measure the upside of these deals. But long story short, I see a lot of room to grow in the single family home segment. So keep your eyes open and your ears to the ground. Thanks all.